Hello and welcome to the Inside Risk and Compliance podcast. I'm your host, Adam Spencer, Director of AJ Fox Compliance, a specialist recruitment agency focusing on all things law firm risk and compliance. I have seen so many people carve amazing and fulfilling careers in this space, and it really has been a pleasure speaking to people who enjoy doing what they do every day. However, one thing that has really stood out to me is how hard it can be for people to access the bigger picture outside of their team, outside of their firm. We created this podcast to share with you some of the insights, experiences and stories of the most interesting people succeeding inside risk and compliance. This week we spoke to Frank Maher, partner at Legal Risk LLP and soon to be partner at Keystone Law. We discussed Frank's journey to building Legal Risk LLP, the first firm of solicitors to advise other law firms on professional regulation and professional indemnity insurance, and why legal privilege is so important to what they do. We talked about navigating the successor practice rules, as well as bet the business liabilities, and why it's important to realise that when you think things are bad, they could be much worse. Hope you enjoy. So Frank, welcome to the podcast. How are you doing?
Thank you. Very well, thank you.
Good. It's awesome to have you on here. I'm really excited about the conversation we've got lined up today. So obviously we've done a bit of an intro about who you are. But for the benefit of the audience, I think your career has been a super interesting one, and I think we want to dive sort of straight into it. I know you spent a couple of decades previously, the early stages of your career, defending lawyers. So let's jump back there. How did you even get into that space in the first place, and how was that?
Well, when I qualified at my old firm, it was one of originally 12 firms that was on the panel for defending law firm claims through the compulsory insurance schemes, originally with the Master Policy Scheme, then Solicitors Indemnity Fund, otherwise known as SIF. And I became involved in that, doing some other defendant insurance litigation as well initially, personal injury work, some high-value stuff. And then as time went on, I decided I couldn't keep up to date with everything, so I just did the solicitor's professional indemnity work and a little bit for other professions as well. And I ended up head of a team. It was the second largest outside London doing that work. In 2000, SIF came to an end and the profession decided to insure on the open market. So
just picking up on that point, because I certainly don't know much about SIF, and I think it might be interesting for the audience. So what exactly was the Solicitors Indemnity Fund?
Right.
And what did it mean for the market for it to disappear?
That was the single compulsory insurer that every firm had to insure with, whether you were a sole practitioner or a big multi-office international firm. That was where you got your first tranche of cover from. So when that came to an end, it was actually huge because a lot of firms thought they could save money by going out into the open market and doing what you do when you renew your car insurance and shop around and find something a bit cheaper than it was last year and so on and so forth. But for some firms, it didn't work out that way because when the firms were covered by SIF, if you had bad claims experience, you would still get cover every year, guaranteed, and the effect on your premium, strictly a contribution, was capped.
Right.
So, although people moaned about it and thought that they were the firm subsidising everybody else, generally people got an affordable premium, even if they didn't like the cost of it in some cases. When it went to the open market, some firms saved money, some saved a lot of money, but then some started finding there were problems. They'd had a bad hit, they'd had a rogue partner, and they got scores of mortgage fraud claims or something like that, and then they found they couldn't get cover or it was astronomical cost. So with the change, we figured that some firms would need some help in avoiding the claims happening in the first place. It wasn't something that people had really done anything about before because you're guaranteed to get cover, so what's the problem? So
you're safe.
So we set up a team, and I did it with my colleague Sue Maudsley, originally to help firms avoid having claims. And to enlighten them on causes of claims and ways of preventing them. And Then in 2003, we decided to set up Legal Risk as an independent firm of solicitors regulated by the Law Society then, of course, pre-SRA. And we thought it was important because we could go into a big law firm, we wouldn't be their competitor, so they could open their hearts to us and tell us what they needed to tell us for us to help them.
Yeah, you'd be a safe space.
Yeah, and no conflicts. So that was important. It was also important to us that being practising solicitors, there was legal professional privilege. So if the Law Society, as it was then as a regulator, said, let's see the advice you've had, then people could say, no, it's privileged, you're not going to see it. This was about the time that the legal profession came into the regulated sector for anti-money laundering purposes. And Sue and I were in the first tranche of a very small number of solicitors to do the ICA diploma in anti-money laundering.
How was that?
So, that was great. I mean, it was huge learning experience because one of the great values of it was you weren't just talking to lawyers about things lawyers do. You'd got people from the banking sector, financial services, insurance, people with different backgrounds, and you learn from them. It may not be directly applicable, but you get ideas. So that was important. And then we wrote a book, the Money Laundering Reporting Officer's Handbook, which it was all early days, and I think when we wrote the book it was probably even before there was any guidance out there at all.
Oh, wow.
The Law Society issued pilot guidance in 2004, which has evolved into practice notes, and now we've got the Legal Sector Affinity Group guidance, which is a vastly larger and more complicated document than we started with in the early days. So anti-money laundering got us in front of some of the big city firms, and we then we helped them with their training and we helped them with their compliance. This is all pretty early days, but on the back of that, because we were in the large firms advising them on the AML, we started getting involved in advising those firms on other things as well, other risk things, and things like conflicts and general professional regulation, training when new codes of conduct came out, as they came out successively over the years. And then they'd come to us when they got problems, and they got a difficult issue, and some of the work we started picking up was cross-border work. So, have we got a conflict problem between our offices in Milan, Paris, and London, those sort of things. So, quite interesting things that weren't run-of-the-mill.
And how were you skilling yourself up around all of this as well? Because this must have all been, some of these areas would have been very new to you as well. You were having to learn as you go, right?
I think we've always been pretty fleet of foot, and we research things, we listen, we go to a lot of events. We had a bit of a watershed moment when we went out to Kuala Lumpur and spoke at a conference there, which that was organised by the Malaysian Bar.
Right.
And they invited speakers from all over the Commonwealth, and they were basically asking everybody, how do you run your compulsory insurance scheme? Because they'd had a few issues on claims there themselves. So we got to make friends in Canada, Australia, elsewhere. And on the back of that, we ultimately started getting work from clients in places like Australia. I've been out there a couple of times, done a few jobs for insurers of law firms out there, advice on governance and claims processes and things like that. And then we managed to acquire a US firm as a client when somebody joined us. And we were already going to conferences in the States every year, and The idea really being to hear what's happening there. I mean, sometimes the US is streets ahead of us, sometimes it's way behind us, but you learn and you pick things up. And we started getting introduced to US insurers and clients over there. So we've built up over the years quite a substantial practice advising US law firms. I mean, mainly in relation to London offices, but not exclusively. Sometimes a US law firm will have an issue, US-based issue, because they advise clients over here. So things like GDPR is the obvious one that leaps out. So we've managed to build up a slightly unusual international practice, and been to events around the world. I've spoken in Moscow, I've spoken in New York, I've spoken in Australia.
Got a lot of air miles then.
Singapore. So,
travelling around.
Yeah, but I mean, it all assists you in understanding international practices and the issues that affect them, because you're hearing the speakers from other jurisdictions.
Yeah.
So it's we've had a good time doing it, but it does give you sources of knowledge that you don't get by just reading the Gazette every week or whatever it may be.
And do you find that certain jurisdictions have a very, very different approach to risk, or that you have to take a different approach with specific jurisdictions?
Oh, very much so.
Them?
Very different, because I mean, we've done work for I mean, there are some European cities where we've advised most of the big firms.
Oh, really?
And but I mean, they came to us because they want to know what UK law firms were doing. I mean, the gap's probably rather less now, but at the time, it was new to them. I mean, going back to what I said before about nobody was really doing it back in the beginning when we kicked off, sort of 2001, 2002. There was only one law firm I'm aware of that had a GC, which was Clifford Chance.
Yeah.
So the firms overseas who may be doing work with Magic Circle firms here would want to know, what the rules of the game were and how's it done here. So we got involved there as well. And meanwhile, we got the cross section of the profession here, down to sole practitioners. You probably can't tell them really, but the biggest firms in the world have pretty much the same problems as the smallest firms in the world. They're all dealing with people. They're trying to herd cats. Lawyers were invented to find their way around rules, so that's what they do. And it's the job of the risk and compliance team to tame them. So
I like that.
Yeah.
And you mentioned earlier that it was important to be a firm of practising solicitors for that legal privilege point. So, what is legal privilege, and why do you think it is so important to the advice that you provide?
Well, it's the right to withhold from production any document, basically. So, if you had a piece of advice, you think you've fouled up, and you want some advice on have we fouled up, then the regulator can be denied a copy of the advice saying, yes, you fouled up. Yeah. Now, it may be the regulator will find out the answer for themselves in the end, but that's important. And it can also be quite important in the anti-money laundering space, because we do a lot of advice for law firms and indeed one or two other clients on anti-money laundering. Yep. We have one FTSE 100 property developer client that Sue Morty does a lot of advice for when they're selling properties to foreign billionaires and some. So it's quite important that if the person about whom the client has concern over anti-money laundering issues were to be told their transaction wasn't completing, that they can't ask for a copy of the advice that the client used in forming the decision that maybe they needed to make a suspicious activity report to the NCA or decline to act further or whatever it is. But, so that's quite important as well.
That's very important. So if they're not, if a firm is getting advice anywhere other than Legal Risk or another firm of solicitors providing advice as solicitors, there's no safe harbour for that.
Well, that's right, or another regulated legal professional like a barrister, of course. And same insurance coverage. I mean, we get people coming to us about what they need to disclose to their insurers and how they handle potentially contentious issues on coverage. And again, they don't want the insurer saying, well, let's see what advice you've had on it. So it's quite important in relation to a lot of the work we do.
Sounds crucially important.
Yeah.
I just wanted to take a moment out to thank our amazing sponsor, the International Compliance Association. The ICA are the leading professional body for the global regulatory and financial crime community, offering professional qualifications, world-class events and training. Go check them out online, and if any of the certificates or courses take your fancy, then you can get 10% discount using our code AJFOX10 at checkout. And I know a couple of areas that I understand you specialise in as well that I wanted to unpack a little bit today. You talked about successor practice rules,
right?
And dealing, advising firms where they're facing bet the business liabilities. So, what are those two concepts, and how do you get involved?
Yeah. Well, the first one, the successor practice thing, when in the days of SIF, when every firm had cover, there was cover for solicitors who retired and cover for practices that closed, and it was free. It was quite nice, really. So
can't complain if it's
what's
free.
not to like? But when SIF came to an end and people were going to be insuring with different insurers, they had to provide a mechanism to ensure there was public protection for claims against firms which had closed. So they introduced what was called the successor practice rule, and back in 2000 when the change was coming in, it was something I did a talk for a local law society, and I predicted it would become a problem, but I don't think I realised even then how big. The issue is this, that if you trigger any of the conditions that are provided for being a successor practice, you become liable to insure the risk of the firm that has closed. Now, that is not necessarily a bad thing. It may be a business decision. There's another firm down the road. You're going to merge. You bring them both under one policy, and you've done your due diligence on them, and you're happy with that, and they're entitled to expect that as part of the deal. However, if you acquire the practice of somebody who's just been intervened in by the SRA for bad behaviour, because you think the clients might be handy to boost your book of business, then the last thing you want is to have to go to your insurer on renewal, or even before that, in fact, and say, by the way, covered on our policy will be this firm that's closed, and it's completely tanked because of misbehaviour. So you can render a firm uninsurable, and if you've no insurance, you can't practice. So it's actually become quite a big issue, and there have been firms that have walked into it without thinking about it, and they've rendered themselves uninsurable.
Wow.
And the firms are closed because of having done that. So in the early days, we started advising people how they could structure their transactions. So if they didn't want to be a successor practice, and if it wasn't a good idea to be, they could proceed, or maybe they shouldn't proceed at all because it couldn't be achieved. So we got a bit of a name with the brokers for doing this. And then we started getting involved in disputes. So one of the other benefits of being an SRA-regulated law firm is we could conduct litigation, do reserved legal activities. And we've done quite a lot of dispute work over whether a firm is or isn't successor, which can have a huge impact for the reasons I explained. The other point you asked about was the bet the business situations. And we've seen a lot of examples over the years where perhaps a firm has had a rogue partner who's got involved in mortgage fraud, the local building society manager and estate agent, valuer, so on and so forth. And I mean, there've been a lot of those over the years. We've seen people abusing positions of trust, so court of protection deputies or trustees, executors, those sort of things. And in the past 10, 11 years, we've also seen a huge number of these development scheme claims where firms have acted for people investing in buy-to-let property or hotels and other developments, and they have bought a single room in the development or a couple of rooms. And there are a lot of regulatory issues around these because they, in a lot of cases, probably the majority, should be regulated by the FCA, and they weren't, so therefore they're illegal, and they all come tumbling down. And the developers would decide to build a hotel. They'd sell the rooms, sell about 2/3 of them, and they hadn't got enough money to lay the first brick. So they needed to get more in. They needed to sell all the rooms before they could really fund the development. So then they spent some of the contributions they'd collected up front on the marketing. So then there was never going to be enough money to build it. So there've been all sorts of problems around them, and some rather more complex than that. And I mean, an example, a firm came to me 10 or 11 years ago. It was the early days, really, of problems emerging here, and nobody really appreciated the full extent. And they asked me to assist them in notifying their insurers of the claims that they could immediately see and any that they didn't yet know about but might emerge, and we did some work on that. And to cut a long story short, they've ended up, there have been a number of issues with insurers about whether they had enough cover or not, because if you have a series of related claims in broad terms which are connected in some way, then they may be subject to a single limit of insurance. So you're doing these transactions at £150,000 each, and you've got £3 million, £10 million, whatever cover, and you think, well, that's plenty. But if you've got 500 rooms in that development, you haven't. So, I mean, this particular firm, I mean, they were potentially exposed to many, many tens of millions. And we've acted for them over the years on multiple disputes and negotiations with claimants that have gone into mediation where there wouldn't be enough cover to pay all the claimants. There are issues on liability as well, and disputes with the insurers, and we've had 5 mediations, 2 arbitrations, and I think it's probably more pending, but so it's still running, but the firm is still going. That's the critical point. So I say bet the business. I mean, it's cost them a lot in insurance, and they've had to fund a number of contested proceedings, but they are still going. And then another one where insurers are denying cover for about £70 million claim, and the firm will go under if they're not covered. So we're advising them on the coverage on that. So these are things that are pretty critical to their existence.
About as critical as they could be. And on that point of cover, though, how have you seen the market change over the time you've been involved in this space?
Well, it's had peaks and troughs. Most of the time, most firms have managed to get cover which they could afford, but there's always a few fall by the wayside. We did have a very bad patch after the global financial crisis. We started seeing a lot of property-related claims come in then, because your mistakes can be masked in a rising market. As long as the property's sold for more than it was bought for, then nobody's lost any money. When the property market comes down and people find they can't sell it, or it's not worth what they thought it was, that's when the claims come in. And back in about 2010, we saw the emergence of a lot of unrated insurers. So they weren't rated by the ratings agencies, Standard & Poor and Moody's and so on and so forth. And they got into solicitors' professional indemnity, not appreciating that the risks can take quite a long time to emerge. It's what we call long tail insurance. So, you write the policy and you don't allow enough for the fact that the claims will take time to mature, and eventually they resulted in a number of insurers going bust because they just hadn't, A, they'd written firms with dodgy records, B, they hadn't charged enough, and C, they had no other line of business to insulate them from the grief. So we acted for a number of firms who had problems over insurers going bust on them.
What happens then?
Well, there is some cover from the Financial Services Compensation Scheme.
Okay.
But in broad terms, at the moment, it's only for firms whose turnover is no more than £1 million. So we had a few issues for firms where their cover may have exceeded the £1 million, but we were able to find a get out. And we even did a judicial review application on one, which eventually was resolved, so we didn't get to a hearing. But
and is this off the back of insurers, trying their hand in this space because they mistakenly think there's a quick buck, or is it because there's a lack of appetite from more mainstream insurers and they're filling the gap, or a mixture?
Well, they were filling a gap, and although pretty well everything was bad about these insurers that went bust, it has to be said that many firms managed to carry on in practice because of them. I mean, problems came home to roost a bit later, but there are firms out there still practising, and although the insurance was worthless, they had the piece of paper that they had to produce to the SRA to get their practicing certificate renewal, so they can say we have insurance. It may have been rubbish, as subsequently transpired. So in fact, although it's not an approach I would recommend to anybody, it did actually keep some firms alive when you look back at it. And I can think of examples that have had to close down because the mainstream insurers just wouldn't touch them at the time.
Would there be any tips and tricks that you would give to law firms in order to ensure they are obtaining, competitive insurance renewals without giving all your advice away?
Well, it's not like your car insurance where you can just go online and compare a few prices. You need advice from a broker. The broker needs to be one with experience of the London market, and one who understands solicitors' professional indemnity in particular. So, we know pretty well all the main brokers, and I would never tell somebody going to big broker A, no, you ought to be going to big broker B. Sometimes they might think we've said that, but we haven't, because we don't. If they go to the guy around the corner who does their office insurance and the car insurance, then we might say to them, I think you need to go to somebody who actually understands this, because that guy around the corner will probably be approaching a London market insurer to place the cover. But the problem is things get lost in translation, because the guy around the corner does not know everything that needs to be shared. So you need somebody who's got good understanding, and there are several brokers out there who've got years of experience under their belt, and new people up and coming, working with them who are well qualified to advise on it. So.
Brilliant.
Be careful changing insurers, I think, is the other thing. Well, the difficulty is if you... I've had a big problem on this one. One firm had a problem on a client matter, which the fee earner notified to the person who arranged the insurance. But the person who arranged the insurance, A, didn't quite appreciate how it could go wrong and result in a claim, and B, to be fair to him, it was around the first COVID lockdown, so the world was not going round in the way it should at the time, and that did not get notified to the insurers, and they changed insurers at that point. So, under the compulsory insurance arrangements that the Solicitors Regulation Authority prescribes, if you have an issue like non-disclosure of a material fact on your insurance proposal form, your insurer has to pay the claim or deal with it, but they may be able to recover from the firm or the individual responsible, depending on the circumstances, the cost of that claim. So effectively you're uninsured.
Yes.
The client is protected because the scheme is set up for protection of the public, but the firm could find it has to dip its hands in its pockets to reimburse the insurer the amount paid. Okay. And this particular case was claimed potentially over £1 million. Wow. Okay. A small firm. And I think the problem has now gone away happily.
We're glad to hear
we
it.
Sorted a couple of solutions out for them.
Yeah, fantastic. Frank, last question I have for you today. We asked you ahead of the podcast whether there was anything you felt was missing from the conversation around law firm risk and compliance. And whenever things go wrong in my life, I often like to try and give myself a little bit of perspective. Your answer was realising that when things are bad, they could be worse. Really keen to unpack that.
Well, I did. I'm about the only defendant professional indemnity lawyer I know who's ever defended a claim arising from the death penalty. So,
wow. Is that something you can talk about? Or
well, the case, it was in another jurisdiction. The client was convicted of beating somebody up. It was a burglary. Killed the person, and they were sentenced to death, which was the standard penalty there at the time, although in practice the penalty was usually commuted to life imprisonment, but you always hope the letter won't get lost in the post before it's carried out. So the client then asked the lawyer to appeal. And the lawyer, well, yeah, that was always worth a shot. It wasn't going to get any worse. So the lawyer was rather dozy, and he'd got his eye off the ball, not just on this case, but every case he got, and ultimately was struck off.
Right.
Another law firm took over the appeal, and the appeal was successful because the sentence was reduced to life imprisonment, or a period of imprisonment, which enabled the guy to walk out because he'd already done a few years while he'd been languishing in jail. So he then brought a claim against the practice of the lawyer who'd been struck off, saying, well, if you'd got on with it a bit quicker, I would have got out rather sooner, and I would like quite a lot of money, please, because there were some fairly chunky figures being bandied out about in other cases that were in the press at the time, some quite high-profile ones, things like the Guildford 4 and Birmingham 6 and so on. So it does date it because I remember sending a telex to his lawyers. Saying,
I don't even know what that is. That dates me.
Well, before the fax, that was how instant communication was done around the world. And it seems incredible now, but you just typed on a typewriter keyboard and broadly it came out the other end. In the early days, it went through a sort of ticker tape process. Yeah. But so the message I sent to his lawyers was your client was a convicted killer before the appeal and a convicted killer after the appeal, so he's not getting six-figure sums off me, So that one went away for a very nominal payment. But, so slightly unusual.
Yeah, definitely, very much so. Yeah, it does give a definite perspective for someone dealing with a much more minor issue, I guess.
Yeah.
Well, look, Frank, it has been so interesting having you on the podcast. You've had some fantastic stuff, and I'm sure the audience will be will have got a load of value out of this. For anyone listening, are you happy for us to put your details in the show notes? And they
yes,
can reach
please
out?
do. Thank you. Yes.
So for anyone who is interested in getting in touch with Frank, we'll put his details in the show notes. But yeah, thank you so much for coming on the show today. It's been a pleasure having you.
Great. Thank you very much for having me. Cheers.
Cheers. We really hope you enjoyed listening to today's podcast as much as we enjoyed recording it. If you did, please do us a huge favour and share it with a friend or a colleague. The more people we can get listening, the more time and energy we can get into recording more episodes and getting the best guests and the most interesting stories and insights. I want to say a huge thank you to the ICA for their support, to Ty and Karem here in the studio, and a massive thanks to Kat for making sure everything runs so smoothly behind the scenes. Don't forget to subscribe to the podcast, follow us on LinkedIn to make sure you never miss an episode. Thanks for listening.